Hello, we're here in Holistic Investments, and I'm your host, Constantin Kogan, and I'm delighted to have today Igor Shoifot. He's a partner at TMT Investments. Hi, Igor.
Hello, Constantin. How are you doing?
Amazing. You know, we're both in San Francisco, like even though we're recording this remotely, so it's a unique COVID atmosphere.
So this content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or any other advice.
In few words, I just want to say, like, what is TMT, right? It's a venture capital firm with already 40 plus companies investment and 14 partial or full exits. It's an incredible team of experts that predominantly, as I understand, focuses on Eastern Europe and but also invested like across the world as well. And I've been I've had a pleasure to know Igor for quite some time, and we have common projects, common interests, and just as a human being, I appreciate Igor like so much. So let's do it. Like, Igor, tell me your story. How did you end up in venture capital? Like, and what is your personal focus? Let's explore first you.
Constantin, thank you very much, and thank you for the kind words, both about TMT Investments as well as myself. So I have a very complex answer to pretty much any question, and I hope to be short. But as a fellow investor, you know very well that one of our professional deformations is that we're fond of talking forever. So I'll try to keep that in mind and not talk forever. My parents were born in Ukraine. I was born in Siberia. I lived in the US for 25 years, started a bunch of startups. 3 of them were reasonably successful. Was a CEO of a large gaming site and platform called Epsilon Games back in the 90s. It was the largest on Microsoft Web TV and MSN TV. At different points, we gave about 5% of all of Microsoft Interactive traffic back in the 90s. Wrote 72 games. Then with an old friend of mine, we built Fotki.com, which became 25 million users, pretty significant photo sharing site, which was started long before Facebook, Flickr, Photobucket, all of those guys. We actually literally started in 98. So that was years before all of that grew to be pretty big. And in 2004, I also sold a company that I owned called The Internship, which was kind of like Monster.com, if anybody remembers Monster.com, but only for students. So it's just for students looking for internships. So sold it to Manhattan Institute of Management. And I invested as an angel in a bunch of deals. I also was the chairman of a couple of accelerators, one in Ukraine called Happy Farm, where we funded over 40 companies on very, very early, just idea stage, not even a prototype, just basically
pre-seed.
Yes, pre-seed, just like kind of like, hey guys, I have this great idea, and actually that went rather well. We have one exit, company called Trackly Newsmate, which sold to a company called Piano. We have DataWiz, a company that's growing very successfully in China. We have Allset, which raised a couple of tens of millions of dollars from Andreessen Horowitz, General Catalyst, and others. So, didn't go that bad. We also, my partner, Anna Diktyryova, and I, we were running Happy Farm, and then we also created a small accelerator in Kazakhstan, and didn't want to say Nur Sultan.
Yes, now it's called Nur Sultan.
Astana, yeah. And then I also taught at New York University and UC Berkeley for many years, and 5 years at Berkeley, 6.5 at NYU, and also a little bit at UCSF. And I invested as an angel in a bunch of companies. I continue to invest as an angel, but alongside with TMT. So I invest my own money. Also, last week actually was the last investment, which I think are about to announce. And that's basically what I do. I live in San Francisco. That's my story in a
nutshell, right? So, well, I mean, I personally know like a lot of the companies that you co-invested in, you're in a board of advisors, like, you know, one of the biggest like deposit photos is, I guess it's one of the most prominent success stories, you know, coming like guys coming from Ukraine, right? And there are a bunch of other great companies you've invested. So probably like besides the fact that you were born there, like, you know, like or like you have the roots close to the Eastern Europe, why do you think it's relevant and it's so attractive? Like, you know, the environment, the brain of the people, like, you know, the capacity to attract venture capital. Why do you think Eastern Europe is the hot place?
It's a great question, and actually, the funny thing is that I keep getting answers to this. So it really, if you would ask me a couple of years ago, I would have given you a slightly different answer. So even though we've been doing it for many years, and you're right, as a fund, even though we don't discriminate just based on language or you know, all those places, I think there are several reasons why they are, so many of them are and will be so successful. One of the reasons, of course, is that, you know, whether you like it or not, but you and I know very well that former Soviet Union had a fantastic tech education. So, you know, you could say, you know, definitely neither you nor I are communists, but they did have fantastic tech education. So, you know, you don't need to persuade anybody that Ukrainians, Belarusians, Russians, etc., are great programmers, you know, great tech talents. And believe it or not, people, even though, you know, we were born in, I was born in Soviet Union. I'm 53 years old. So I finished school in Soviet Union and actually served in the military in the Soviet Union as a tank commander. But
a separate story, probably.
Yes, it is. It's a story for another day. But the funny thing is, certain things also create very entrepreneurial mindsets. You know, when you're in a constantly changing situation, when you're in a situation of so many unknowns, when you have so many, well, when you have every bridge behind you burnt, you have nothing to fall on, you don't have, you know, well-off parents and friends. That's the one thing in Silicon Valley, especially in New York, less so, as you know very well, or in Boston. But in Silicon Valley, people are like, oh yeah, you know, failed, haha, burned through $15 million, haha, that was fun, great ride, guys. That's no fun, you know, you failed, dude, you know. Sometimes it's not your fault, of course, and, you know, I failed many times, and often actually because of me, not because of the environment or the market. But sometimes it's not your fault. But there is this mindset, especially in California, that, you know, as they used to say, I no longer hear this expression, OPM, other people's money. When startup gets the money, the founders sort of feel like, oh, that's like fun money. We should play with it. You know, it's fun. You know, what have we given up? Not as Russians, you know, sounds horrible in English, but nobody would even give it a second thought when spoken in Russian. Russians would say, well, you'll give your kidney if you fail, right? Here people will be like, what the hell? What are you talking about? This
an expensive deposit, yes.
Yeah, exactly. And there it's just like, it's a saying. Nobody literally means it, but, you know, so people here kind of feel like, you know, money, you know, played with it, failed. Entrepreneurs coming from the Soviet Union, they really do not want to fail. And I would say this is not based on statistics. This is based on my own kind of hunch. But my feeling is that they don't fail as often, as easily, and as you know, organically. There was an old interview of Mike Tyson after he beat off a piece of Evander Holyfield. I'm used to be a very avid boxer. So there is an interview, really great interview, just like right after that. And an interviewer is saying, Mike, listen, you're one of the greatest boxers of all times. You're amazing. You know, people love you. You're so great. Why do you, you know, why are you such a sore loser when you're losing? And he was just like silent. I was trying actually to find that on YouTube and I can't find it. And he was like silent for a moment. And then he says, you don't understand. I can't do Mike Tyson, but he has this really funny way of saying things. And he said an amazing thing. He said, you don't understand. You're either born a winner or you're born a loser. I'm not a loser. I don't know how to lose. So when you're saying this, well, bullshit, et cetera, gracious losing, I don't understand gracious losing. To background of living in a strange, very tough environment where you have to, really work hard and make sure that you get things done, and the rules are constantly changing, and it's hard to say what the rules are, and that creates entrepreneurs. 3, bridges burned behind you, and 4, it's just this kind of immigrant mentality, which I don't need to tell you, but probably some of our listeners know how different an immigrant, doesn't matter in which country, an immigrant mentality is. Of course, there is a quote-unquote bad immigrant mentality, as in, oh, you guys all owe me, you're a rich society, pay me. But I haven't seen much of that, from people from the former Soviet Union. So sorry for such an impassioned, disorganized answer, but hopefully
it's great. I think it's actually pretty structured. I mean, it's just your type of structure. I would agree in most of the above mentioned reasons, and I should say that it's definitely tough, to be an immigrant for sure. I mean, I'm quite fresh in this. I'm only 7 years in this country, but that's a huge, I would say, add value to the mentality, because you don't expect any help. It's most likely you're just coming from entrepreneurial background, and if you had some successful exits before, great, but most of the folks, they don't, right? They're starting from scratch, and they haven't, that's all their life. They sacrifice everything to be successful. But my question to you, in your fund, right, do you require actually founders to relocate, let's say, if you invest under certain premises that you say, okay, now you have to be close, 10-mile distance, from our headquarters in San Francisco, or you have remote teams that you are okay and you communicate with them Zoom, Skype, whatever, right? So is this a requirement, or this is just a good option?
So not only do we not require that, but in fact, I don't think we have any, we make any requirements, because we understand, first of all, because we think the founders know better how to run their business. We don't want to impose, no matter how smart a VC is, or how wise he or she thinks she is. I think a VC should understand that we're superficial. No matter how well we know some area, just because you need to know a bunch of areas, just because you need to spend so much time, talking to people, developing deal flow, there's no way in hell that you would know, 2 or 3 or 4 areas nearly as well as somebody who's been, working day and night there. So the short answer is no, we don't. The slightly longer answer is we don't really just kind of invest in Eastern Europe. We really mostly invest in Silicon Valley. And for us, there are several requirements for a company to be seriously considered. One, we do not look at, we used to invest pretty early, but actually in the majority of our companies, which is funny, we were the very first venture capitalists. But we no longer do. We require at least $1 million in annualized revenues, so close to 100K per month. We require at least 100%, so twice per year growth, 100% growth per year in revenues. We do not want companies with huge burn. So, there is a certain, if, I don't know what it would be, but something with, 300K in sales per month and 500K expenses. If there is a tendency for this to become smaller, or if there is a huge hyper growth, I'd look into it. But with such a burn, it's a big question if a company could at any point be profitable. And I think in this respect, we're much more East Coast than West Coast. But we only invest in companies which have clients in markets that are attractive for a future M&A. So we wouldn't invest, probably wouldn't, I don't know, but we probably wouldn't invest in companies where, all the clients are, let's say, I don't know, in the Philippines. nothing's wrong with Philippines. It's just that there are not that many M&A, companies looking to buy them. So I would say, again, too long of an answer to a short question, but I would say we don't. We also do not necessarily look for companies in Eastern Europe, but we prefer. We don't say, oh, because you're not from Eastern Europe, we're not going to invest. But since we all speak Russian, we will like to, go into circles where other VCs wouldn't go, and to get deals before they, become famous and big and, highly priced.
Well, you partially answered that was my next question. So what is your due diligence process, right? How do you structure the deal to make sure that the founder is also comfortable, given the fact that, let's imagine, they can be from Minsk, Kiev, Moscow, or any other place in the world, right? And they have all the conditions, right? They have at least like the hyperbolic growth. They have $1 million in revenue. They have all other conditions that you require. So what are the next steps? Imagine those things that are already they're covered, and then how do you structure it legally, and are there any other caveats that people should know about?
So two parts to it. One, I think every VC has a rather specific approach to deals. I'm sure that you've seen, and I hope to have you as a guest at some point, VC Kuchnia. VC Kitchen. That's great.
I'll advertise it separately.
Thank you. That's a little startup of mine. We already had 15 of those. 8 of us, reasonably well known in the Russian-speaking community, venture capitalist partners at 8 VC firms. We get together and we talk for an hour about everything in the world, and then we spend an hour listening to startup pitches, and then we criticize them. But the interesting thing to me, even though all of these people are my friends, but the interesting thing to me is that time and again, I see that each and every one of us has his own or her own approach. It's not that, I could say, oh, this is the only way to invest. Everybody else, does it wrong. It's just different approaches. For us, revenues are very important. We believe that people who are focused on real business have, much greater probability of succeeding. Growth rates are very important for us. We believe that if at a very early stage, a company does not put it in the DNA of the company, and it's not huge part of the mind of the founder or founders to grow, then the company is just not going to be a fast-growing company. And we've been, I've sat on boards of lots of companies, including a unicorn company, right? And I've seen what happens when the growth is not, tremendous. The buyers say, well, nice, but we'll give you, I'm not going to say what it is, but very low X. And when the growth speeds up, then the buyers all come over and say, holy moly, these guys know how to grow. We can really project that, 3-5 years from now, this will be huge value. So yeah, it makes sense to put a lot of money in and to buy them. So that's the first. I think everybody has a specific formula, more or less. In our formula, revenues, growth speeds are very important. A fact that a company is rather unique, not necessarily super unique, but rather unique. You can't be like everybody else. Then, why do we invest in you and not in 100 others? We really only invest, and that's probably one of the things that sets us apart. We don't think that a specific segment focus is that super important. We do invest in segments where we believe, we could be mistaken, but we believe there would be lots of M&A possibilities. So for us, these things that I mentioned, these are important in due diligence. These are the things that we want to discover. In terms of how do we structure, I would say, even though we are a public company, strangely, on London Stock Exchange, on AIM, but we but I know this from lawyers with whom I worked, we pretty much require the same things that all the other typical Silicon Valley VCs require. There is a list of things that we ask for. We do not invest in, strange corporations. Nobody invests in, Belarusian corporations or Russian or, sorry to disappoint you guys. Nobody will invest in a Russian company here. As a matter of fact, Russians wouldn't invest in Russian companies. So they need to be in locations, typically Delaware, sometimes Nevada, where where the minority shareholders' rights are protected, where there is straightforward rules, where there are lawyers who can deal with stuff, where there is jurisdiction of the courts that, in case of something happening, we know how to deal with, et cetera, et cetera. So in terms of structuring, I would say, yeah, again, probably for the majority of your viewers, I'm not going to say anything new, but there are typically just literally two approaches. One is a price round where, a lead proposes, let's say, $40 million valuation and $5 million round, and leads with $3 million, and then founders looking for a couple of other people. So sometimes we're lead. We actually don't care, but for some firms it's important to be a lead in specific deals. For us, it really doesn't matter. For us, sometimes it's important to be the very first, and we're first investors in a couple of unicorns, Reich and Bold. We're first investors in quite a few companies that right now are valued in hundreds of millions of dollars, but when we invested for 5, 10, etc. So in terms of due diligence, it's a very standard list. We're certainly looking for very standard terms. I've seen very strange terms that other investors are offering, and I'm not disparaging them, but one thing very interestingly, kind of a side topic, is that to entrepreneurs who are watching this, my suggestion, don't just always keep your eyes just on valuation. There are lots of other things in the term sheet and the agreement that you should be very careful, and that you should really talk to your lawyer about, and really think what the consequences are, because sometimes they really come back to bite you very, very painfully. So again, sorry.
So this is the nature, like you've covered
giving long answers to. Sorry.
No, it's great. I think you're covering the broad spectrum, which is amazing. So now let me again try to dissect what you've just mentioned. So again, if a company does not legally does not have a legal entity in the United States, so you will encourage them to open up a legal entity.
Yes.
You will help them to structure it and invest. Okay, so this is
and
there's a plain vanilla. Yeah, there's a plain vanilla model how you do that, and you're trying to play games, and to you can be a lead investor, you can be a co-investor, so that's not an issue. Now the question is a quick one, so I have several because after your last speech, so let's go the short versions and long versions, right? So the short version is very, very simple question. What is your ticket size? A typical one.
Between 200K and 5 million.
Great. So that was simple. So now imagine a practical case scenario, right? A company meets, let's say, 3 from 4 of your major requirements. So imagine they have the great parabolic growth. Again, they have legal entity, great team, but they don't have, let's say, $1 million in revenue. They have whatever, 300, 400, whatever it may be. How would you deal with this type of guys? And they don't even have already cash in the bank to open up even an illegal entity, or to hire a lawyer to make sure that your proper offer or anyone's offer is actually well evaluated, right? So that's a common situation where people are growing faster than they're able to digest and to project what's happening. So how would you deal with such company?
So a short answer is, like I said, and it's a formula. It's not, one fits all. So if these guys, for example, are growing fantastically, if we think the technology is unique, if the team is so good, if we're really impressed with their approach to growth, and the revenues are not quite there yet, we sometimes would do a deal. We definitely, if they need help with a lawyer, we would say, well, here's a great lawyer to help you incorporate and reincorporate. And if, in a few cases, we even helped them with restructuring because they had some very, let me just put it in a nice way, not sophisticated way of arranging investments from previous investors. But, usually these investors, they don't want to kill the company. They want the companies to succeed. They're not going to make money if they're just going to say, no, we're not going to move. Okay, well, we're not going to invest. The company is going to die. So it's not, I've never seen an unfriendly situation in this respect. I think typically you're trying to work something out. So in a couple of cases, we still went through. In other cases, when revenues were really, really far from that, like you said, 300K, no, that's not going to work. But if we see a situation, let's say a company just launched and had, 20K first month, 40K next month, 60K third month. That's pretty interesting. We should start working, and at some point we'll see if they're getting to 100K. Of course, they shouldn't expect a very high valuation, but this could be, sort of a risk worth taking. The funny thing that a lot of startups don't understand, unfortunately, but also a lot of investors don't understand, is that sometimes early investors take absolutely unnecessary risks by, investing in companies that are still not proven, but want valuations that are not that different from companies that already, have, great growth and great numbers. And just mathematically, I don't understand, why should I invest in a company, let's say at $12 million valuation that, barely has $30,000, $40,000 monthly revenues, when I can invest at a company at $16 million valuation that has, 120, 150, 200 valuation. The difference between these two is not 30%. It's not. It's huge. It's humongous. And so in this case, if I'm offered this too, so if there is a situation, one thing that entrepreneurs, but also sometimes investors do not understand and do not appreciate, is that VCs are good VCs if they have a great deal flow, and you always have a whole bunch of options. So when a startup comes to you in a purely hypothetical situation and says, I have $40,000. So sometimes an investor is faced with a situation when a startup approaches an investor and says, we have $50,000 monthly revenues. We think our valuation should be 10 million. And then you have another option, a startup that has, 3 times as much or four times as high, revenues, $150,000, $160,000, but wants valuation just 50% more, 15 million, etc. There's not even a question in the mind of an experienced VC that you would select the second one. Especially, of course, there are lots of other parts of the formula, but if they have the same growth speeds, if all the other conditions are roughly equal, you certainly want to invest in a startup that has lower risks, and a company with much higher revenues and longer history of good growth speeds is much less risky a company. So one of the reasons I think we are successful as a fund is because we learn to really focus on real business. We learn that anybody can tell amazing stories, and they're usually much shorter than the lengths of my sentences. But you should invest in people who know how to grow.
No, I think it makes a lot of sense. And so here's my question to you in terms of valuation, right? So how do you advise reasonably to a startup founder or a founding team to approach for the valuation? Because I've seen so many interesting cases where people are, I don't know if they watched a lot of movies or they just, they just have natural greed in them, like somewhere ingrained, but they somehow create the valuation, which is it's just not reachable. You cannot agree with it. Even if you want to, if you sincerely love the project. Yeah. So how would you advise them to approach, the valuation, especially? So let's go to 2 major stages, which I think are the most important. So the seed one, when they're when imagine they got some money from their own pockets and they already have some MVP or alpha version and they already have something. So the seed and the Series A, right? So how to approach it reasonably so that they will be investable.
So I hope you wouldn't mind I use this to advertise Startup Kotiki, that there is, for those of you who speak Russian, for those who don't, sorry, but for those of you who speak Russian, there is an episode of my Russian language show Startup Kotiki, which stands for Startup Kittens, or rather Startup Kitties, Startup Cats or Startup Kitties. And it's called How to Estimate Your Valuation. And I talk for maybe 20 minutes about what the approaches are. So a quick digest of that. The best way to, well, there are 2 ways. One is the market. The market is not going to give you, with some exceptions, the market is not going to give you the wrong estimate. You go to a bunch of others and you talk to them, and you'll get it from investors. But the second one is whichever industry you're in, there are M&A reports published in your segment always. So let's say you are in software as a service, SaaS. and you're starting your startup and you have first revenues and you're not sure what the valuation will be, but you do have revenues. So what you need to do is you need to go to Google and type software as a service, or SaaS M&A valuations, or SaaS M&A report, or SaaS M&A multiples, keywords like this, and you'll definitely find 2 or 3 recently published. Sometimes they're private, and then after a while, usually they will become public. Published studies, and the studies would have 10, 20, 30, sometimes even more deals where they would say the X was this, the X was that, and you can very easily find what the average X in the industry was. Let's say and typically it's 12 months revenues, the last 12 months revenues times something, or
so multiples, basically.
Yes. Or it's that last month before purchase time 12 multiplied by something. So for example, if a company had $1 million in what was last month, July sales, and was just bought for $600 million, that means that they were bought for 10 times annualized revenues. So you take 1 million, multiply it by 12, and that's for 5 times, of course. Sorry, because you multiply it by it's 12, etc. I'm already thinking about the second part of the answer. The second part is that you go to VCs, you go to investors, and you say, well, I'm thinking, make sure it don't sound like, we wouldn't accept any valuations under blah, 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 because some investors would be like, all right, they wouldn't accept it. And you would lose somebody who could potentially get very close to you, but because you sound like, we're not going to accept it, well, you're not going to accept it. You just lost a deal, for sure. So my suggestion is not to sound that way until, of course, if you have a whole bunch of offers, then of course you can say, the lowest we got was, 25 million. We can't accept that. That makes sense because you have somebody. But if you have nothing, and you say, we don't accept anything less than that, well, you could just lose investors. So you go around and you just name a range. You come up with some sort of a range, and you say, well, we think, based on what we've seen, that the range is somewhere between, let's say, 12 and 15. And typically we say what VC would, I would always give a straightforward answer. Sometimes actually startups offer prices that are very low. And believe it or not, some of the people would be surprised. I sometimes honestly say, I like it. It's wonderful. And to be frank, it's a little bit on the lower end, but yeah, I'm happy. But I'll just tell you, it's kind of on the lower end. But very often, that would be just completely crazy. And I would very honestly, I wouldn't use pejorative words, of course, but I would honestly say, listen, this is something so beyond what I expected that we can't discuss that. But, I like, or, if I do like, I like the deal. If you at some point, come back and offer something better, we'll talk. Almost always they say, well, what would you prefer? And I always say, listen, I'm not ready to bargain, but this is just outside of the range. But if you're asking me, I would say the range would be this and this. I'm certainly not ready to invest yet. I need to discuss with my partners. I'm not, it's not my personal company. We need to have an investment meeting, et cetera, et cetera. But my feeling is that it would be that. So that's the answer.
I think you put it beautifully. So that's, again, be flexible, be reasonable, make your research. So that comes down to basics, but I think it's important. And maybe some other quick synopsis of other, I would say vital elements that you have to be prepared for while speaking with an investor, especially when there's already negotiation of potential deal. And imagine the good case scenario, as you've mentioned, there's several investors fighting for you, right? And there's one case scenario, and there's a second case scenario when you only have 3, but let's say strategically you can only pick 2 of them, right? And one may have a better valuation, another might give you some unique access to the next rounds and to give you some infrastructure, advisory, unprecedented amount of expertise in a particular domain, a niche domain. So how would you also advise founders to pick their investors and to make sure that they're not making any mistakes? And how would you advise them to prepare better for that?
So it's a very good and a very tough question, and I'm a little bit afraid to advise you because everybody should really be guided by quote unquote common sense and reason. I would add, I agree with everything you just said. I would also add that sometimes I believe actually one of my partners and I constantly have friendly arguments about that. He doesn't agree with me, so I'm not saying it's necessarily true. I believe in this. I think having a brand name investor, like a big brand name investor, Sequoia, Andreessen Horowitz, General Catalyst helps a lot. I've seen so many VCs sending deals to each other saying, Sequoia is an investor in this. And people are like, oh, Sequoia is an investor. As if this is something magic. My partner's point is like, who cares? We have better results than Sequoia. And I'm like, yeah, but people don't invest in something because, you and I invested in this.
That's a validation. What you're saying, it's like a
Yes.
benchmark that
Yes.
like people are respect and they already like take it seriously because you went through their due diligence, right?
That's right. Right. So one, it's a validation, but second, and that's my main point. I don't think it's necessarily rational to believe that having Andreessen Horowitz is really a huge plus, because look at their several incredible exits. I seriously believe that, be it not for Mark Andreessen, Instagram would have not had $1 billion exit. As a matter of fact, I think they would have been doomed. They had no business model, huge burn rates. I heard something close to $10 million per month burn rates. They would have just died. They probably were, I have no idea, I'm not an insider, but they probably were desperate. And, he just, I don't think he bluffed, but he kind of like, whatever, had a meeting with Zuckerberg and said, look, here are the advantages, here's the presentation my partner's prepared, here are the reasons, meet the guys. He met the guys, $1 billion, everybody's happy. Be it not for him, I can't have lunch with Zuckerberg, and I can't persuade anybody to pay $1 billion for a company burning 100 million or so per year, even though I love Instagram. So how do you choose them? You really need to focus on money. As a Roman emperor said, money doesn't smell. It could smell if these people are very strange. So you certainly shouldn't. You should always do your KYC, know your customers, make sure these are not some murky, strange figures. And if they are, you'd be in a world of trouble. So other than that, and assuming you're dealing with professionals, I don't think it matters that much. I think money is the most important. However, like I already said, money is not the only thing. Look for other conditions. There could be some really nasty conditions in not just in the term sheet. Term sheet is not mandatory typically, but in the agreement. So you be really careful with that. And I would always much prefer to go with very straightforward conditions without huge liquidation preferences, some strange conversion. If you don't do XYZ, we convert you, not, to a 3 times lower valuation. We grab a huge piece, stuff like that. Sometimes founders have very cavalier attitude toward that. Like, oh, I'm getting $10 million. What's going to happen? Dude, everything could happen. Companies that announce $1 billion IPOs fall apart. And not necessarily fall apart. There could be, just tough times. And in the tough times, some of the venture capitalists are, forgive me, vulture capitalists. And they're like, oh, nice, we're going to grab a huge piece of these guys. I'm not saying it's ethically wrong. Like, we wouldn't do this. But, you've seen what you're signing. You're not, nobody's holding a gun to your head to sign this. So. Sorry for an impassionate answer. I've just seen this a couple of times. I'm like, founders, come on, guys, look, 3x liquidation preference. Seriously, you're not in trouble. Why are you signing this? I don't understand.
Well, because I think it's because of this ambiguity. Like, the previous interview I had with David Seymour, like, he's, Wave Financial, Wave Partners, like, they have in total AUM, like almost like $500 million. And, he told me openly, listen, like the first fund he made, like, is probably one of the first, like 60 funds in LA they had with the VC funds. When there was a crisis in 2008, 2009, like nobody has like, had no money. There was like, everything was on hold. They made crazy purchases. They actually like acquired companies that was like half like bankrupt, or they invested in like some amazing conditions. And he actually elaborates like on what were their conditions. Not to go deeper into it, but this is And the ambiguity is that, like, in the eyes of his LPs, he's very smart. He's doing a great job. Like, he's actually making money to them. Like, so now in the eyes of a founder, like he's just like a vulture, right? So it's just like killing them, right? So I think it's just because
and
of the
like I said, I don't see it as, oh, sorry to interrupt you.
Yeah. No, go ahead.
Good. Go ahead. No, I was just going to say, I don't think it's, ethically questionable or wrong, et cetera, et cetera. It's just that you need to be smart and look at what's, like, it's totally fine to buy a used car. I have nothing against buying a used car, but when you're buying a used car, you can't just, listen to the guy who says, oh, everything is just great, dude. It just runs great. You need to really kick the tires and just, like, seriously, have a mechanic look at this, et cetera. You can't just, sit there and just drive it out smiling. It could be a lemon, and so that's all. But nothing is wrong with selling cars.
100%. And I listen. It's always like, this ambiguity. Like, in every game, there's a loss. Like, it's just the way the markets work. So, like, I think we just have to rationally understand, like, what's in it for us. And if a founder wants to protect themselves, you totally, like, was on point, right? You have to read. They have to attract people. And by the way, there are multiple ways how to attract attorneys, even like a contingency level, like, or give them maybe some shares. I don't know. Like, there are multiple ways how to incentivize, like, great people. And if your ingenuity helps you to do that, like, that's the risk management that you have to apply to any deal. Now, coming back to your exits, like, because you have tremendous success in, like, as you mentioned, like 14 either full or partial exits, right? And there was recent news, like some great news that you've posted, like, ever. So not to give, like, I don't want to take time from you, like, so my question is specifically, maybe you can show, like, 2 recent examples and explain what I'm interested to understand, and for the viewers to see, is how do you take a decision when to exit, right? And how do you actually consider that maybe it's not a good time to exit, I prefer to hold it more, right?
Right. So on the full exits, with some exceptions, I can't really go into details, as you would understand. There are some cases, those of you who are in M&A or, mostly late stage VCs, that sometimes you have an option. For example, you have an option if you sell the whole stake in a company that is being sold, or if you will keep some, and sometimes you would think really hard, company is growing incredibly fast and that stake is appreciating, but then the question is, what if this company will be private then for the next 20 years and you would have no way of exiting? What if you would have zero information rights and you wouldn't even know what's happening in the company? And that, piece there could be there, well, not forever, but like almost forever. So sometimes that's not even an option. You just, the company is bought outright or goes IPO, and then you can keep the stock or not keep the stock, sell the stock, et cetera, et cetera. In terms of partial exits, we'll like to do that. And typically, I think we're very typical. I don't think I'm exposing any secrets here, but we're very typical VCs. We're looking for a combination of different things. One, how soon can we recoup the investment? And of course, like all good VCs, we try to return the amount that we invested. 2, how much will still remain in the company? So on the one hand, would it make sense to just exit fully and just sell our stake to somebody who wants to buy into a fast-growing company? And there are lots of VCs and private equity and family offices who want to buy stakes into really fast-growing companies that are valued at 100, 300, 400, 500 $million. The other side of that is that any smart investor, and I think, just to compliment you are, I think, a very sophisticated investor, and you know that you need to hedge. You can't just put everything into one bucket. You need to hedge, and partial exits are a great way of hedging. Taking a little bit off, recouping the investment if you can, still having a stake in the company. So I would say with full exits, we have no say. We're never majority shareholders, nor even 30-40% shareholders. The biggest stakes are not that significant, and sometimes small stakes are really small, like 3, 4, 5%. So you can't, sometimes very often you're not even on the board of directors. You're just being informed, okay, hey guys, we're selling. You have no say in this. But with partial exits, we're just approached all the time by, new funds that want to build up a nice portfolio, family offices who are looking into these deals constantly, just private investors who are saying, oh, wow, love this company. Can I invest? And the company says, no, you can't. And then they look for investors and they say, hey, you guys hold a stake, I understand. Would you like to sell some or all, etc.? So that's the answer. Again, not a short one, but a detailed one.
No, I appreciate it. I think it's good to have your perspective. Of course, it's a very robust question, so it requires more details, and every deal is separate. But it was just interesting to understand your rationale, like in terms of how do you approach, whether you should exit now or later, or because that's the holy grail, of all the investments, the exit that makes everyone happy, and then you're fixed it, and then you also build a trust, portfolio that you not only know how to identify good deals, and making due diligence, but you also know when and how to exit at a good time.
Yeah.
So you've been showing great success in this, and that's why I think it's great to learn from such great examples. So I want to touch now a little bit different domain, which you and me also had a conversation about it, maybe at least for some time you can elaborate. There was 2017 early 18, which is a crypto frenzy, and there was a lot of interest in this particular market, and I know that you personally and some of your co-investors also participated partially. And just briefly, if you want to say maybe you can also combine it with an answer, what are the most preferred domains and investment areas? Because I know you invest in big data, in e-commerce, and marketplaces, and SaaS, as you mentioned. What about blockchain, and does it play right now a huge role in your investment portfolio, or are you even looking in there, or what are the most important areas that you're looking at right now as well?
So like I said, we're really mostly revenues driven. So I don't think there are many areas in which I would not look, but it's easier to say where I definitely wouldn't look. I wouldn't look into travel right now. I wouldn't look into hardware. I wouldn't look into content, games content, magazines, and stuff like that. And I wouldn't look into offline, some retail and stuff like that. Other than that, I think we probably wouldn't look into alternative energy because this is just so far, pure pharmaceuticals, pure medicine. However, we would look into, biotech, even though it's not necessarily really the area of the focus. But there are half a dozen of areas where we have been looking, where we have been investing, and where we think a lot of future lies. And the main reason why we think that these areas are the key are a combination. The main reason why is it's a combination of several things. One, there are lots of opportunities there, lots of niches that are not occupied. Two, we don't believe incumbents in these areas dominate them so much that there is no chance for anybody. For example, in search engine, come on, who's gonna kick Google's ass right now? Maybe somebody would, but I don't believe this. And last but not least, we believe that there is huge M&A activity that is happening and will be happening there. So this said, I would say there is half a dozen of areas that I much prefer: big data and cloud, software as a service, e-commerce, but specifically only subscription model in e-commerce, marketplace, probably one of the most favorite, and then a couple of other things such as AR, VR, and artificial intelligence. Although when I say artificial intelligence, I'm always very apprehensive because people call everything artificial intelligence. Yeah. So these are half a dozen of our favorite areas.
So in a nutshell, you're industry agnostic, and you just have certain preferences, obviously, and you don't discriminate revenue, right? So that's primarily the main criteria, right?
That's true.
Okay, so I get it. I guess crypto and blockchain is not your main focus, so we'll skip that, right? I guess like it was a certain time there was like some interest there, but right
Yes.
now I understand that it's a little different. I get it. So in terms of, maybe let's talk a little bit about your I don't know if we can call it a side project, or also like additional project that I'm also like happy to be part of, like
Yes.
there's VC Kitchen, and also how do you call it, startup kittens, or startup kitties.
It is, I
Yeah,
guess.
if you can say the goal, the mission, like why did you say,
Okay.
who are there, like what's like, what is the major like advantage like
Sure.
to participate maybe there. Yeah.
So the short pitch is there are lots of Russian-speaking entrepreneurs. A recent survey of Silicon Valley that looked, I think it was Deloitte, but I don't remember exactly, that looked into which languages are spoken in the high-tech workers' homes, found that 7% speak native Russian. That's just like 2. Wow, I thought it would be 1 or 2 maybe. 7%, every 13th person is a Russian speaker in Silicon Valley. It's just unbelievable. But they're not very well united together. They're not well organized. They're not like, Indians, for example, have Thai, which is amazing. The Indian Entrepreneurs Organization went to a couple of their shows. Wow, unreal. So there is no place for Russian speakers, no virtual place. Secondly, there are so many startups that are just brilliant, but they do not have the systematic knowledge. They have, some knowledge here, some knowledge there. Everything is very random. They don't have much access to the right context. So the idea was to create an entertaining show, and there are several shows in my YouTube channel, in our, I should say now, YouTube channel. One of them is Startup Kotiki, or Startup Kittens, which is my, random episodes, sometimes every day, sometimes once a week, that talk about different aspects, valuation of the company, how to pitch a company, how to convert non-paying users into paying users, how to deal with churn, etc. Just very specific, not just general philosophical talk. And part of that is a show called VC Kitchen, or VC Kuchnia in Russian, where, by the way, you can pitch in English as well. So if you find us in Facebook, you can contact us as a startup and would listen to English language pitches as well. We actually had 3 pitches already. We had 102 pitches so far. Of them, 99 were in Russian. And so, 4, actually, by now 4 in English. VC Kitchen is really just a gathering of 8 partners at VC firms, all of us native Russian speakers, and we talk for about an hour about all sorts of different issues, about venture capital, startups, etc. It's very entertaining. Actually, a lot of people say it's the only place where they literally could be in a VC kitchen and just hear how VCs randomly talk to each other without, even though I'm coordinating
With
that,
no filter.
trying as much as possible. Yeah, exactly. So we just talk openly, and sometimes it's a very tough talk, and sometimes it's a very heated argument about this or that. And I don't think it was never a full agreement by everybody on anything. We always have different approaches and different styles. And then we'll listen to 3-minute pitches by startups, and a pitch that we like, we might invest in, and a bunch of them already got a whole bunch of investors in a lot of business. So that's the idea, and I'm also working on a site that would help startups shape up the best for growth and for investment.
So right now, did you with all this effort, did it lead to some investments?
Not by me, although actually, because they're pretty early. So typically these are early seed and pre-round A startups. There was one startup that I really liked that pitched me, and that I brought to my partners, and we talked with them, but haven't invested yet. So these are very
Would you invest as an angel investor or from a VC?
I would, but as an angel, I only, these days, well, so far, I've only been investing alongside the fund. So it's separate. It's a separate term sheet. It's a separate note or anything. But I wouldn't do it on my own for a whole bunch of other reasons. We can talk about that some other time.
No, I understand. So you mirror that's your personal risk management. So you mirror like the fund activity, and I think it's just like simplifies
I don't need to do due diligence. Right.
Yes.
I'm,
totally get it.
interests are protected. I don't need to do this and that and the other. And, and when I talk to a startup, I'm a partner at a VC fund that puts, $1 million or $2 million in it, not a guy who put a little bit of his own money.
No, I think there's a huge value, and there was maybe I can advertise it also a little bit, because there was another component which was interesting personally to me as well. Like as angel investors, they might not have the same, like most of the time they don't have the same infrastructure unless they're partners in a VC firm, right? And the ability, even if they like the project or they personally know someone, right, it's really tough to have all the legal, the compliance side, the economical side, everything, look through, rationally, with no rush and with no emotional adhesion to a certain personality, right? So that gives you just another, or maybe even not 1 or 2 or 3 or 10 eyes, and that helps you to do the right decision. I think it's a great initiative, and hopefully it will grow. And I'm happy to assist you with what I have as well, right? And yeah, so we now also come to a certain point where I have to ask you your mentor abilities about advising. There was some book that literally one book, I haven't prepared you for that was specifically my goals. One book that changed your life, or you consider that would actually you would advise to read if it would be only one book.
Count of Monte Cristo.
Okay, why?
I'm quite serious.
It's a great book.
It's a great startup story. It's one of the best one, it's a great startup story. 2, it's very kind. It's not a nasty thing making, pardon me, an asshole out of you. 3, it's really a story, if anybody still remembers it. It really is a story of a guy who was driven by revenge and anger and viciousness, and wanted to kill, and not just kill, but badly hurt the people who did him wrong, and who ended up through, sometimes because of the circumstances, but sometimes because he grew as a human being, ended up understanding that revenge and anger is not everything that we have in life, that you need to create something, that you as a human being are different from an animal who needs to, run and kill somebody. But it really is a very, it's a startup story. It's a story of somebody who didn't give up, who almost died, who was destined to just die there in this castle forever, and instead became successful and actually happy. So it's a story of somebody going from the nadir, the lowest point of unhappiness, to the total happiness, love and friendship and understanding and forgiveness and everything. I hope I don't sound like a rabbi or or
no,
Pope,
it's amazing. I think Alexandre, I actually agree with you. Alexandre Dumas, he actually his writing skills are exceptional, and he explained clearly the transformation, the personal transformation of a person who's coming from all this negative emotions, and being treated the way he was, the Count Monte Cristo was treated, he was in prison, he was disgraced, he was almost killed, he was coming from unexistence to rebirth. So I do agree with you. A lot of entrepreneurs, who we forget that they also they have some emotional death when they might fail in startups 1, 2, 3, maybe 10 times, and then there is one success story that defines their life, right? So this is I love this analogy because I think it's very relevant, and no, I think this is great, and maybe some other reading material or any other inspiration for you personally that you would advise either founders or people who run the VC firms, that to follow, besides you and Russian, but people who don't speak Russian, let's say, they cannot follow your amazing YouTube channel, which I'm going to share obviously, but maybe something else that you would advise them to explore. It's a question.
Oh, sorry. I thought it's a state, but I just sort of agree with what you said. I think generally, let me just put it this way. I think we're all, tell me if I can answer this way, if that's satisfactorily. We are in an industry where we all have a professional deformation, startuppers and investors, where we all are playing a game. I'm sure everybody at least heard of the book, The Games We Play, right? If you haven't, at least, read a quick summary. We'll kind of play, a Monopoly. There are, pieces on the desk. We're moving them. I'm an investor. You need to pitch me. It's a game. So I think we're all, not necessarily badly, but deformed in this, that we're looking for, startup, success, money, et cetera, et cetera. Nothing's wrong with that. It's, it's great. We're like a blinded horse that is, running and needs to be first. And if the horse wouldn't be, he would just kind of look around and kind of notice cute little horses and, would have other interests, but he needs to run. He needs to win. That's his function. So the same is true about us as startuppers and VCs, but I would want to answer your question differently. I think if, as a startup and as a VC, you create something that is really useful to others, that really makes a difference in their lives, not necessarily just, making them happy, but just like making it easier for them, making it more straightforward, saving them pains, saving them from some disasters, especially, et cetera, et cetera. Wow, you've done so much, dude. This is just great. Money, we're in the country where it's not that hard, quite frankly, to make money. I mean, if you're lucky, let's just be honest, if you're lucky to be born with a reasonably high IQ, if you're lucky to have parents who paid a lot of attention to you and brought you up, if you're lucky not to be born in a horrible neighborhood, if you're lucky to go to school where, teachers are not drug addicts and, are not idiots and are smart. And so a lot of this have to do with luck. People, I think, really overestimate how wonderful they are, successful people. And they underestimate just how lucky they are to have the genes that they have, to be born in the place, in the time, with those parents, in this neighborhood, to go to the school, to have great friends, to live in, the right city or right suburb, etc., and not to live in the middle of freaking nowhere where you need to drive 5 hours to school and 5 hours back from school, etc. So anyway, sorry for an impassioned answer again, but the short of it is, I think it's important to do something that makes a huge difference, that drives you, that makes you happy, that, makes your life full of sense. And I think a lot of times, forgive me, those of you who are religious, I'm not, but a lot of times when people look for religious, it's when they're looking for meaning. And religion gives you meaning. So not being a religious person, I think there are meanings in different things. Maybe it's my Jewish background that I'm always looking for a meaning, but there are meanings in things, and I'm hoping that each and every one of us, every single person, listening to us, looking at the screen, is not just driven by an idea of making money. Nothing wrong with making money. I want to make money, but is really driven by something meaningful. And when you do something meaningful and you're good at it, you succeed. So again, I keep giving you endless answers. Sorry about that.
No, I think listen, the meaning is the topic of my life. So I actually think that ontological aspects of searching for a meaning, that's really the most important. And ironically, people think that they will find a meaning, like, somewhere, like any belief system that you mentioned. It can be religion, it can be like any practice, like whether it's meditation or something. And we all have different paths, right? But I think the talent of being able to find the meaning, even to have this desire, you can call it luck, or you can call it perseverance, or you can call it something that is invaluable, right? But that's priceless. I do think that any startup journey and any person that actually wants to realize his own or her own dream, and actually make somebody's lives happier, like, and more efficient, faster, bigger, like, and that's already partially a meaning. And if you go deeper than that, like to the ontological level, why you're doing it, that's even better. Then you're doing it with even more meaning. So yeah, I sincerely share your analysis of this of this particular like more philosophical question, right? And I do think like every person deeply inside, that's their goal. They just don't realize that, and sometimes they're just running after like money only or fame or those.
Right.
And the pyramid of desires, that's a very on a low end. However, to be completely truthful, that's without this levels, you cannot like even like make a safe transition to the others, right? So
Right.
yeah, I appreciate your time, Igor. It was really insightful to hear your story, personal, and the TMT investments. And I wish you sincerely, like a lot of luck, a lot of perseverance, and more great exits, unicorns, and rainbows, and everything connected to this. And especially a lot of success to your newly launch projects. And I will share all the links if people want to explore, whether you're Russian speaking or you're English speaking. If you want to pitch, we're gonna definitely arrange that will be that will happen. That will be available to you, and you're going to be in front of the greatest the cream of the Silicon Valley, right? And not only you have folks from from all over the place, Europe,
that's right,
East Coast, so
Asia,
that's what it is, right? Asia, right? So I think last thing I will just endorse Igor. So Igor is one of the greatest meta connectors, right? So that's another important trait, I think. Just helping other people to find each other, and at a certain given time remove yourself. That's also a huge talent. So I appreciate you for that, Igor, and I wish you personal growth and a lot of luck.
Thank you so much, Constantin. And I will quote a friend of mine who heard about this motto, "Fake it till you make it," and he said, looking at you, I don't know, I've known you for several years, and I do believe you that you're, kind of this happy person trying to make others happy. But he said, but I have an advice for the other people. If they're not, generally friendly and want to help other people, they should fake it until they make themselves into friendly people wanting
100%.
to help other people. I love that. That was such a good advice. Constantin, thank you so much. I really enjoyed it. Again, sorry for endless answers. I look forward to seeing you. Sorry, I know you're in San Francisco and I'm nearby. I'm very strict about my quarantine. But when it's over, definitely looking forward for a nice breakfast, lunch, or whatever together.
Likewise. So we're going to make it happen. Yeah, so thank you, Igor.
Good seeing you. Thank you so much. Really enjoyed it.